Hey all, my name is Felix and I've been working as an analyst in Paris and Berlin, and in today's video we will be looking at two beaten down stocks with growth potential. Let's start with SoundHound AI. This company is a leading developer of conversational artificial intelligence software, and importantly, it has a competitive edge over Siri, Alexa, Google, and Co. You may know its software from ordering fast food at White Castle, Chipotle, or Applebee's. Its software is also widely applied across automotive, healthcare, and insurance sectors. Let's have a look at the stock price development of SoundHound AI. It peaked both in December 2024 and October 2025 and is currently down by around 50%. But why is that? First of all, it presents a riskier play than other established AI companies. Therefore, SoundHound suffered from the recent AI bubble concerns and resulting sell-offs. When Meta, Nvidia and Co. dipped 2 to 3%, SoundHound took a harder dip. Secondly, it was trading at the very expensive price to sales ratio back in October of nearly 60 times sales that now dropped to 30 times sales, which is still expensive. Let's look at the future growth potential of SoundHound AI. It is serving a growing voice recognition market that could hit $60 billion by 2030, as expected by Fortune Business Insights. Moreover, SoundHound grows faster than the general conversational AI market and could see a yearly revenue increase of more than 50% for the coming years. And thirdly, it has a really strong booking backlog that currently stands at more than $1.2 billion. Thus, the stock could rebound in late 2025 or 2026, given its strong future growth potential. Analysts estimate that the stock has an upside potential of more than 50%, meaning it could be trading at almost $17 instead of its current value of $11.50. As always, there's associated risks. The biggest concern is that SoundHound won't manage to turn profitable in the next 1 to 2 years, meaning they would have to distribute additional shares, which could lead to a dilution of shareholders. Moreover, it is important to note that SoundHound is competing against the industry tech giants such as Google, Meta, and Amazon. Let's talk about RELX plc. This company has a bad image as being an outdated research company that provides academic output no one reads. But this is certainly not true. It is much more a global data analytics company that holds 5% of this market segment, dominating a legal, scientific, and risk analytics sectors. There's a bunch of sectors and companies that depend upon its data in order to be able to operate on a daily basis. Thus, the subscription model is creating steady, recession-proof recurring revenue. This stock chart shows that RELX plc is down from its July heights by more than 25%. So while it used to trade at around £40, it is now down to 30. But it has had such price swings before and it always swung back so far. But why is the stock down? First of all, there is the fear of AI lowering entry requirements for future competition. Secondly, other companies seem to be more interesting as this stock seems boring at first, while this is certainly not true. So what about future growth opportunities of the company? Firstly, the revenue growth expectations of the company remain nearly unchanged at 6.46% year over year. Secondly, the company is actively shifting away from print-based to digital service delivery, leveraging more and more AI. And thirdly, there's increasing demand for data-driven compliance, regulatory and risk management solutions, positioning RELX to benefit from the global expansion of such requirements. Analysts agree on 44% upside, namely a price target of 44 GBP. There are two risks that could hit the company. Firstly, industry-wide automation and digital disruption could lower the entry barriers for competitors. And secondly, RELX is currently investing heavily in developing and rolling out sophisticated AI-enabled products, and those expenses could outpace revenue growth. Thanks a lot for watching this video, and feel free to leave a thumbs up or a comment, and don't forget to follow.